All right, back again for another short live stream show tonight. I'm pretty tired though because I did a couple extensive pieces. I did for my Patron account contributors. There is an extensive uranium market research piece outlining all the risks that I could possibly think of, with a bunch of different articles and highlighting my conversations with a bunch of uranium industry contacts I've talked to over the years. So that's behind the paywall for only $5 a month. Also, a number of different oil articles out there, including problems with some of the larger oil companies, analyzing that was out yesterday, and then another one today about the rig count and some of the other problems. Looks like the Saudis are going for the kill shot. I provided additional evidence with additional articles cited in there, and President Trump and the Trump administration are finally figuring that out with the additional moves. Okay, so let's get into today's short topic. I was supposed to interview my friend Tony Nash again. If you're not familiar with him, you can go back into the archives and look at his interviews. One interview. He's also been on Real Vision TV a bunch of times. He runs a AI firm that tracks global supply chain analytics in real time. He's also done consulting work for a lot of Chinese firms. He's worked in Asia, I think, for 15 years. He doesn't live in Asia right now, but he did, and he lived in Singapore, and he was routinely doing a lot of work in China. He was also hired as a consultant, I think, temporarily to advise the Chinese government on Trump's trade tariffs, and he told the Chinese government officials that Trump was going to put the tariffs on, and they didn't believe him. So go back and listen to that interview. I think I did it in December, so it was a number of months ago. It's really, really good. But I was going to interview him on an update on problems in the global supply chain that are coronavirus related. Also, how U.S. and China trade relations, and apparently now and apparently Japan and European Union relations with China are also now breaking down. I was going to ask him about how long, how difficult, what would be involved in factories manufacturing the global supply chain leaving China. So the South China Morning Post did an extensive article on this today from Finbar Birmingham and Mark Magnier in the US and Sidney Long in China. So in Hong Kong, I think. Or China. I think China. So this was a coordinated article. This is actually going to be the first article in a five piece series. So they're going in depth. You can see the two different articles on your screen. I think they're related. There's a lot of anti-China news coverage. I get accused of being a China basher. I am looking for facts. I am looking for good analysis. I am looking for data, because data drives my investing decisions on how to allocate capital, on what to not buy as an investment. If you're using bad data, you're probably going to lose a lot of money. So I'm not China bashing, I'm pursuing the truth. Now, there's a lot of patrons that would disagree with me, but oh well. Okay, so this article says the coronavirus, China faces fight to hang onto foreign manufacturers as the US, Japan, the European Union make the global pandemic exit plans. 3 of the world's 4 largest economies, the US, Japan, and the European Union, are drawing up separate plans to lure their companies out of China. The reason this is important is because around 40% of China's GDP is still exports. Another 25% is speculative real estate, according to Jim Chanos, depending upon how you measure it. So a lot of the Chinese economy is still based on exports. And those exports go to a more affluent consumer than most Chinese consumers outside of China in the US or the European Union. So if the US or European Union decide that they don't want to buy from China, and look at the rhetoric going on, whether it's Fox News, CNN, mainstream media news channels, a lot of it is criticizing China, putting a lot of blame on China, all the different things that the Chinese government did wrong, whether it's allowing flights out of Wuhan and blocking domestic flights. So they let people who were potentially infected from Wuhan fly to Thailand and Italy and many other countries and cities outside of China. So the backlash, the anti-China backlash, is just ramping up. The mainstream media is fanning the flames here, and the political rhetoric, the political winds have changed. Other than Joe Biden, who's in bed with the Chinese government, read Peter Schweitzer's book, Secret Empire. A lot of Democrats actually seem to be pretty harsh on China. At least that's the talk, that's the rhetoric, because they seem to, at least with what their words are saying, want to protect the American worker. Now, if Joe Biden wins the presidential nomination, I think he's going to be a China president. But both political parties, at least their talk, now I judge politicians by their actions, not their talk, but their talk is very anti-China lately, and about moving more of the global supply chain, especially the prescription drugs, the starter chemicals that are so crucial for prescription drugs, generic prescription drugs, out of China. So there's a lot of key components that over the next maybe 2 years, it's going to start, more factories are going to start leaving. Now, this is going to take a lot more time. Everything's not going to move in just a couple years. It's going to take a lot longer than that. There's going to be a lot more hurdles and red tape, and this article talks about that. So business figures warn not to conflate political statements with the economic realities of manufacturing. 3 of the world's 4 largest economies, US, Japan, European Union, are drawing up separate plans to lure their companies out of China. This is the first in a series of 5 stories exploring the global backlash that China may face as a result of its actions and rhetoric during the global pandemic. The first story examines the push by foreign powers to bring home production of some goods, particularly vital medical equipment and medicines, due to an over-reliance on China exposed by the global pandemic. Over the space of 2 weeks, powerful figures from 3 of the world's 4 largest economies have publicly announced or discussed plans to lure their countries out of China, with such rhetoric finding growing support after the supply shock caused by China's economic shutdown. On Tuesday, in reaction to their coronavirus outbreaks. On Tuesday, European Union Trade Commissioner Phil Hogan said the bloc would seek to, quote, reduce our trade dependencies after the pandemic, Politico reported. Last week, Japan unveiled a $2.2 billion fund to tempt Japanese manufacturers back to the country or even to Southeast Asia as long as they leave China, in response to supply chain disruptions stemming from the pandemic. This followed the director of the United States National Economic Council, Larry Kudlow, saying that Washington should pay the moving costs of American firms bringing manufacturing back from China. Quote, I would say 100% immediate expensing across the board for plant, equipment, intellectual property, structures, renovations, end quote, Kudlow told Fox News, adding to his comments in January that the coronavirus outbreak would be a boon for American employment. However, the U.S. has no formal corporate repatriation program as yet. Firms from the US, Japan, and Europe have been moving manufacturing away from China for some time due to rising costs and the impact of the US-China trade war, but the pressure is now on to accelerate this, with the coronavirus highlighting how reliant the world is on goods made in China, particularly vital medical products. Michael Alkire, president of healthcare resource partner Premier, has already identified 22 items of protective clothing and 30 drugs that are likely, quote, so critical that they need to be produced, end quote, in the U.S., even as the coronavirus continues to tear through American cities. Many are currently made in China, which dominates the world's personal protective equipment, or PPE, and pharmaceutical markets, as with many other manufacturing sectors. Quote, for an N95 face mask, the cost to manufacture it overseas before the pandemic was about 30 cents. U.S. versus 34 to 36 cents domestically, Alkire said, quote, we've dodged a bullet. What we've seen in New York could have been widespread. There will be some serious shifting of supply chains after this, end quote. Scott Paul, president of the Alliance for American Manufacturing, said that the idea of reshoring and decoupling is, quote, gaining currency beyond the Peter Navarro's, referring to hawkish White House, this is a spin here, hawkish White House trade advisor Peter Navarro, a hardliner on China. Actually, the worst hardliner is Bob Lighthizer. Covered that a lot in my podcast. He knew all the different World Trade Organization violations that China's done over the last 20-something years since they joined. Since, 1999? He knew all of them in a meeting. He just blew the Chinese government officials, the trade officials, the diplomats away. They were shocked that he knew all of them. Quote, I think that the inertia is for accelerating these trends. How much of that lands back in the United States is an open question, but I think it's much more certain that we'll continue to flow out of China into other places, Paul said. For China, this presents a problem. While the Trump administration acrimony is hardly new, relations with Japan had been thawing. Thus, Tokyo's repatriation package, quote, touched off a heated debate in the Chinese political world, according to the Nikkei Asian Review. Li Shengli, chief economist at Zhongtai Securities and an advisor to the Chinese government, said while the rhetoric did not provide an immediate threat to China, it could be a serious long-term challenge. Quote, the disruption caused by the virus forced foreign companies to look for suppliers back home, and the shortage of PPE also makes people regretful about the hollowing out of manufacturing in developed countries, Li said. The outbreak originated in China, which was the first to experience the humanitarian and economic impact, but that means it was also the first to largely recover. I wouldn't call it much of a recovery, because there is tons and tons of evidence all over the internet that there is a second wave all over China, and has been shipping billions of masks and other forms of PPE to other countries, most of which have shortages, albeit amid some controversy over quality control. My friend Jeffrey Landsberg at Commodore Research has been documenting the traffic. You can also look it up yourself on TomTom, but his newsletter, he documents the traffic, and he said the traffic is down, I think, way over 20% from a year ago. So the car traffic, only rush hour is anything close to 2019 levels. The rest of the traffic on every other day in all the major cities in China is down over 20% across the board. 70% of protective masks used in the US are made in China, as well as a significant portion of its medicines. Reducing that dependence for medicines and supplies feeds into wider concerns over China's growing economic, diplomatic, and military might, and a slew of bills have been introduced in Congress here in the US to counter this. One, introduced last month by Florida Senator Marco Rubio, a Republican, would require the U.S. to reduce its supply chain dependence on China and has attracted support from 3 Democratic senators. A tougher, again, because this is American workers want those jobs. A tougher stance toward China is a rare bipartisan issue in Washington these days. I've also seen a ton of people commenting all over social media that they're going to be boycotting Chinese products. They will never buy anything made in China again. I've seen a lot of people posting that. Now, in actuality, there's a lot of things that are stamped made in the U.S. where a lot of the component parts are still made in China. But, a lot of people aren't aware of that. Quote, once our nation has recovered from this unprecedented crisis, we must take steps to address the systemic vulnerability and supply chain risk that the coronavirus pandemic revealed, Rubio said in a statement. It is unfortunate that it took a global pandemic to make clear the ramifications of offshoring our industrial base to countries like China. Another bill introduced last month by hawkish Republican Arkansas Senator Tom Cotton, I'm guessing the Chinese Communist Party official that monitors the South China Morning Post made him write that into this article. Arkansas Senator Tom Cotton would ban federal funding for Chinese pharmaceuticals or Chinese ingredients and mandate strict rules on a country of origin labeling. The recent use by U.S. President Donald Trump of the Defense Production Act, forcing U.S. companies to make emergency public health products in desperately short supply and mostly imported, could spur a permanent increase in production of some items, trade analysts said. This trend is expected to gain momentum as public anger over China's handling of the virus increases. In a survey released last month by American Analytics and advisory poll Gallup, U.S. public opinion of China fell to a 20-year low, with just 33% of Americans holding a favorable view. So this one is, I have another study here. This is another Pew Research poll that just came out a couple days ago. This article is all over the internet. I just so happen to have the link from the South China Morning Post, but it's literally all over the internet. Pew Research survey, 66% of respondents held a very unfavorable view of China. A majority of Americans said they lack confidence in Xi to do the right thing, and they don't trust China anymore. Okay, these results were echoed in a survey by the Pew Research Center, an American polling group, last week. Already, sources say that medical staff in American hospitals are angered when presented with Chinese-made PPE. This wave of anti-personal protective equipment, or PPE, this wave of anti-China sentiment and it's only increasing. And both political parties, a lot of politicians from both political parties seem to be on board, and a lot of members of the mainstream media, Fox News, CNN, mainstream media seem to be on board too. Will sharpen the pressure on other sectors, particularly consumer goods, to look away from China. According to the 2019 Reshoring Index released earlier this month by American consultancy firm Kearney, the pandemic is forcing companies to rethink their supply chains, accentuating trends already underway through and before the trade war. So Peter Zeihan has been doing a lot of speeches and presentations about this for a couple of years now. He just came out with a new book in the last 6 weeks that came out called Disunited Nations, The Scramble for Power in an Ungoverned World. And in his speeches and the interviews he's given about the book, he talks a lot about the de-globalization and a lot of manufacturing leaving China. So maybe I can get him on for an interview. I will reach out to him. We'll see. He's a very busy guy. So we'll see. Although I think we're not going to agree on anything about the shale oil, because he's been repeating that shale oil is profitable at $35. He's been saying that for a couple years now. And he's still repeating that. In the recent interviews he's done about his new book, he's been repeating that shale oil is still low cost and they can get costs down and become profitable still. Not that the entire thing's been subsidized by, unfortunately, by pension funds and also by Wall Street banks and the U.S. government. Quote, the lessons we must learn from COVID-19 are as momentous as they are harsh, Kearney said in his report. Quote, at minimum, we expect companies will be increasingly inclined to spread the risk rather than put all their eggs in the lowest cost basket, as many long did in China. Well, China is no longer the low-cost producer. The low-cost producer, speaking to some of my other friends, is in like Vietnam, India, Bangladesh, Mexico. So the salaries, yes, they're still low on an overall basis, but the relative salaries for factory workers has gone up a lot in China. I think factory workers' salaries in China over the last 15 years or so are up 500 or 600%. So they're still low, but they're also up a lot, which means that some factories are already going to Thailand and Vietnam. The trade war that President Trump put on with the tariffs made a lot of marginal Chinese factories very uneconomic. And there were already a lot of problems, as I've highlighted throughout my podcast for over a year now, with a lot of Chinese manufacturing. Denny McMahon, who wrote China's Great Wall of Debt, talked about how a lot of Chinese manufacturers were not profitable, and they pledged their factories as collateral. They were still running their factories, so they weren't making any money. They weren't making any profits. They were still running their factories. They pledged their factories as collateral, and they got into speculative real estate and construction. And this was pervasive all over China. There was a lot of stories in 2019 about Chinese billionaires that had defaulted on their loans. They had pledged their factories and businesses as collateral. They had gotten into construction and real estate, and then they couldn't pay back those dollar bonds, dollar-denominated debt. There was a story about a female Chinese jewelry entrepreneur. I think she was a billionaire. And she had pledged all of her factories, and she'd gone into real estate, and things were going bad, and she defaulted on her bonds. I think she even got an award from Xi. Anyway, in 2019, so a lot of these low-cost manufacturing is no longer in China. China wants to automate a lot of their factories too. 2019, U.S. imports of manufactured goods from 14 low-cost Asian countries fell to $757 billion from $816 billion in 2018. This was almost completely driven by a 17% drop in imports from China amid the trade war, Kearney said, but the result was that U.S. manufacturing gained as a percentage of the nation's gross domestic product. This was not necessarily this does not necessarily mean that companies were coming back to the U.S. in any significant way, the study found. Instead, the U.S. saw a big jump in sourcing from Mexico and Asian countries other than China, in particular Vietnam, where a lot of Chinese manufacturing owners are moving their factories to Vietnam, but that also means that probably the Chinese Communist Party is not dictating policy there. So if a Chinese factory owner moves to Vietnam, probably the Chinese Communist Party is not going to dictate policy to a factory in Vietnam, although Vietnam does have a corrupt and wacky communist government too, but probably not as bad as the Chinese Communist Party. In particular, Vietnam, which filled the gap left by which Chinese Communist Party can decide go tell Justin Trudeau to go pound sand after he sends a cargo plane over there to get an N95 mask, and then the Chinese government just says, Huawei CFO, bye-bye. Filled the gap left by declining Chinese imports. Therein lies the rub. Or the masks are bad. The N95 masks, there's a lot of reports out there that the N95 masks are faulty. There's a lot of faulty Chinese N95 masks. There's tons of stories about these. Therein lies the rub for medical supply chains. There will almost certainly be government-backed schemes to repatriate production of vital goods. Nobody wants to be caught out for a second time, and these policies enjoy popular support around the world now. But for other sorts of goods, business figures discourage conflating political movements with economic realities, particularly at times of such heightened tensions. Mats Harborn, executive director for China at Swedish heavy vehicle maker Scania, says that, quote, there are lots of discussions going on about supply chains, about diversification, but none of these conversations are about reshoring, end quote. A member survey by the American Chamber of Commerce, AmCham, in Shanghai this month showed that 70% of respondents were not thinking of moving their supply chains out of China due to the virus. Many of them are seen to want to stay in China to sell its domestic market of 1.4 billion customers, except that a lot of these firms don't make that much money. Look at all these manufacturers in China, these American firms that can't take their money out. Kyle Bass and many others have documented that there's billions and billions of dollars in profits that these companies manufacturing in China or selling goods in China couldn't bring the profits out. They're blocked. The Chinese government blocked them with the capital controls. Kyle Bass has talked specifically about a story of a company that has, I think, $10 billion in cash trapped in China, and they're not telling their shareholders. I think he won't say which company because then he'll get sued. So there's tons and tons of examples. China forces these companies that operate in China to have 50% silent Chinese partner. There's technology transfer forces, forced technology transfer. There's intellectual property theft and espionage. It's a mess. Many of them are seen to want to stay in China to sell to its domestic market of 1.4 billion customers. Look at all these large corporations that told their shareholders over the last 10, 15, 20 years that they were going to make billions of dollars more. I remember I was an investor in one of the tobacco companies because they were safe defensive stocks, and they were telling their shareholders every year that the China market was going to open up It was Philip Morris, that Philip Morris was going to be able to sell cigarettes into the Chinese market. And guess what? It never, that they had a Chinese partner, and it never happened. I was a shareholder for years for them, and it never happened. So all these companies saying that they were going to have open access to all these Chinese markets, it just hasn't really happened for most companies. Many of them, or the technology gets stolen. Like, look at Apple. Huawei stole most of the intellectual property from Apple, Samsung, LG, Sony. All the valuable IPs has been taken. Many of them are seen to want to stay in China to sell to its domestic market of 1.4 billion customers, while others have found it difficult to wean themselves off the world-class manufacturing and logistics base China has become over the last 30 years. Many have set up their plants, yeah, but then you still have to deal with the Chinese Communist Party, which can say all of a sudden, oh, we're not exporting this. We're not exporting N95 masks. We're not exporting face shields. We're not exporting PPE equipment because you will not agree to the Huawei contract, to the 5G Huawei contract. Many have set up plants elsewhere for export, but will maintain a China base for domestic business. Quote, we saw Larry Kudlow's remarks offering to pay for U.S. companies to relocate to the U.S. We are just not seeing that being driven by real business needs, said Kerr Gibbs, president of AmCham Shanghai. Quote, relocating a company from China to the U.S. is not like packing a suitcase and going. It's a complicated process with a lot of different factors. The sort of packages unveiled by Japan and floated by Kudlow with the, quote, fixed costs of relocating, said Hai Wai Tong, a Hong Kong University economics professor, may appeal to, quote, companies in China operating on the margins, but they do not deal with the variable costs on the ground, such as labor and land, which tend to be more expensive in advanced economies, which would be exactly why factories are going to go to Vietnam, other parts of Southeast Asia like Thailand, and to India, Bangladesh, and Mexico. But I think a lot of countries like the US and European Union and Japan would be okay with that. An executive at a Tokyo-based optical equipment maker, or if the factories do come back, and there might not be a lot of factories that come back, they're going to be mostly automated, like how the Foxconn factory in Wisconsin, a lot of it was automated. Of course, Foxconn also got enormous rebates that they shouldn't have gotten from politicians, but politicians are scumbags. An executive at almost all politicians are scumbags, except for Ron Paul and a couple others. An executive at a Tokyo-based optical equipment maker, speaking on the condition of anonymity, said that rising costs in China are making it, quote, less rational for us to maintain the production base there, but that they had yet to seriously consider the program to relocate, quote, for companies like us who had built the production base in China to benefit from cheap labor costs there, and for those who are struggling to explore the market there, this could be a good window of opportunity to review whether the strategy still pays off, he said. For governments serious about reshoring manufacturing, Taiwan has in recent years been a case study in how to do it successfully. As of April 16th, Taipei had approved 180 Taiwanese companies to invest Taiwan's currency of $751.4 billion, or about 25 billion US dollars, in bringing manufacturing back from China since the beginning of last year, according to official data. These companies were all hit by the US-China trade war to some degree and had invested in China for more than 2 years before reshoring. They have enjoyed Taiwanese government help in securing land, water, electricity, labor, and financing, as well as tax breaks. The sorts of, quote, variable support others may need to consider. But for the time being, the U.S. appears a long way from formulating a coherent incentive program, with the immediate focus being on responding to the pandemic. More than 26 million Americans have filed for unemployment since the pandemic struck, leaving states with their finances hammered. But the U.S. is still reliant on getting medical equipment from China. That's the problem. The majority of N95 masks, and the U.S. had a lot of N95 masks months ago, but a lot of them were bought by either Chinese government agents or people who were profiteering and then shipped back to China. I spoke with Home Depot and Lowe's employees months ago. This was like 3 or 4 months ago. This was December, January, when I was hearing stories about what was going on in Wuhan from my friend trapped in Wuhan at the time, and they were out of masks then. They said that people were calling on the phone, offering to buy 500, 1,000 masks. People are coming in and buying hundreds of masks at once, and they were gone. One of the employees said he hadn't seen a mask, and this was early January. He said he hadn't seen a mask in almost 6 weeks. For the time being, U.S. appears a long way from coherent strategy. As one state-level representative speaking on background said, quote, offering state incentives in the middle of a crisis that has destroyed state budgets is not a good look. And the second article in this series looks at what is next for China's foreign relations amid the coronavirus blame game and loss of trust over its handling of the initial outbreak. The additional reporting is by Yasuko Seki in Tokyo. So overall, this is a pretty solid article. There's a few things in here that were spun There's some pretty good analysis. There's some balanced quotes from both sides. So overall, I think this is pretty good. Now, they didn't talk about the forced technology transfer in China, how a lot of companies have to have a joint venture partner that is Chinese, a silent partner, and that there's intellectual property sharing. So they didn't talk about any of that. They didn't talk about the corporate espionage and the theft of intellectual property in research and development. Of course, they didn't mention any of that. But it's extremely common. There's a lot of Fortune 500 companies, S&P 500 companies that have had their intellectual property stolen over the last 20 years. Okay, well, I think that's it for this short little live stream show. I have other articles here about what Larry Kudlow said and problems in the Chinese economy. So it's going to take at least a couple years after we're done with a lot of the coronavirus problems before we start to see more factories leave. And I don't think a lot of the factories are going to go to the U.S. The U.S. and China are going to have a very messy divorce. But it looks like a lot of factories may be going to Vietnam, Southeast Asia, places like Thailand, India, Bangladesh, and Mexico. The anger towards the Chinese government, the Chinese Communist Party, is immense. Now, I don't have a problem with most Chinese people. I have a problem with the Chinese government. Thank you for the super chat. Askcores 11. So should I just keep drinking? Look, I'm not going to endorse anyone drinking. It is a Friday night. If you want to have a beer too, you can go ahead. I'm going to go lift some weights after this. I'm going to eat some dinner, and then I'm going to go lift some weights. It's been a long day. I put in a lot of work getting those those articles out from my Patreon account contributors. That uranium article was a lot of work, sourcing all the articles. Sourcing all the articles, doing all the analysis. There's a lot of... I tried to cover that from a bunch of different angles, so people really understand the risks. There is a lot of upside in uranium, but the risks are also really, really big. I was up 4x on my Denison speculation. 4x in under 2 years. And then Fukushima happened, and in a week they were gone. And people are like, oh, that won't happen again. That's a low probability. That's a fat tail event. That's a low probability event. Uh-huh. Not what I just had. You got to read the article. You got to read the article and all the sources cited. It's not as low probability as you think. It really sucks. With the nuclear power plant construction in the 1960s and 1970s. I'll just leave it at that. And there's a lot of oil analysis, oil market analysis behind the paywall too. An immense amount of it. I think we could see, depending upon how long the oil market stays in a bear market, I think we could see big dividend cut. The market's not expecting dividend cuts. A lot of people aren't. From like Kinder Morgan, they just raised their dividend smaller than people expected, but it was only a 5% dividend raise. But their dividend payout ratio is already slightly over 100. Kinder Morgan had a surprise dividend cut in 2015. No one saw that coming. And the oil supply demand fundamentals are even worse now. We could see, I'm not saying it's guaranteed to happen, but I'm saying there's a probability of it. We could see Kinder Morgan have problems too. Most people are not prepared for that. The bottom line is, do not rely on a lot of these oil stocks for dividends. Until the global economy is functioning and the demand for oil is increasing again to somewhat normal levels, I would not rely on these oil stocks for dividends, for dividend income. Maybe for capital gains, but not for dividend income. I've seen really good analysis in the last week that Chevron and ExxonMobil will be borrowing billions of dollars in debt to pay their dividends. Super chat from Daniel Ashley. Thanks for all the hard work. You're welcome. Oh, also one other point. I have way over 100 Patreon account messages that are unread. So if you're emailing me, emailing me or messaging me on Patreon asking about Franco-Nevada and what you should do and their exposure to oil and gas, I wrote an extensive article on it last week. Please go read the articles. I got a lot of messages about Franco-Nevada, and so I wrote an article about it last week. Franco-Nevada's strategy is, it looks like they're going to go do another acquisition to offset the risk from their oil and gas royalties. Please go read the article. Please do not send me messages, especially when there's an update. There's tons of updates about Sandstorm Gold. Some guy was messaging me about Sandstorm Gold. There's tons of articles about Sandstorm Gold behind the paywall. Also, I don't know why people own junior mining stocks that have little or no cash. I don't know why people put so much of their capital into junior mining stocks that have little or no cash. It does not make any sense. It's very frustrating. I get message after message after message about this junior mining stock. And then if I message you back, it's like, how much cash does this junior miner have? And then normally most of the time it's, I don't know. If you own junior mining stocks and you have thousands of dollars in a speculative position in junior mining stocks, you should at the minimum know how much cash the company has on the balance sheet and how much cash the company is burning just to keep the lights running, or just so the executives can overpay themselves. Again, this is why I don't like a lot of junior miners. Rule number one is, how much cash does the junior miner have? This is not an environment where a lot of these junior miners can raise cash. Even the gold juniors, with gold prices, they were over 1,700 yesterday. I didn't look at gold prices today. Even the gold juniors can't raise capital right now. Now, if gold goes close to $2,000 an ounce and the investment banks start opening up more of a gold financing business again, more of their investment banking for gold companies, maybe juniors or merchant banks do, and they have bought deal financing and private placements, maybe the juniors can raise some capital. But right now, with gold prices where they are, a lot of juniors cannot raise capital. In general, I don't like most juniors. There's very, very few juniors I like. I focus on companies that can actually make money, or actually have cash on the balance sheet. That's something that most juniors don't have. Okay, super chat here from Abbey Road. Real job loss is higher due to unemployment website problem, but lower due to people applying opportunistically. What is the real figure? It's a good question. I've seen a lot of people posting on Twitter from Florida and other states that the unemployment websites for Florida is dreadfully behind, like over a month behind for a lot of people still. So it's tough to say. Also, there's a lot of articles coming out that a lot of people who are working minimum wage jobs or slightly above minimum wage jobs at like restaurants or retail that are on unemployment are actually making $600 more per week not working. So you know government is inefficient. You know the system is not working when people on unemployment can make $600 more per week not working. That's a problem. Now, there's not many alternatives to working, but people have a lot of free time now. Hopefully, people are using the free time wisely. Hopefully, people are learning new skills. So a year or 2 years from now, you will have more money coming in, more income coming in. Okay, I want to thank everyone for listening. Thank you very much to my over 800 Patreon account contributors. There is a lot of them now. It's growing very quickly thanks to George Gammon. Shout out to George if he's listening to this short little live stream show. It's almost 900. It's growing really, really rapidly. It's awesome. I put in a lot of work. There's a lot of good research behind the paywall. A lot of different topics. Oil market, oil dividend stocks, uranium now, a lot of gold and silver companies, silver miners, trading volatility, article from 3 weeks or so ago about bear market rallies, predicting while stocks were falling that the Fed would intervene more and cause a stock market rally, and the volatility that would cause and how they would screw over a lot of short sellers. So all that was covered behind the paywall in articles. Thank you very much to my Patreon account contributors, my monthly PayPal contributors, and people tip me once in a while. In the information in the description section, my email address to send me tips through PayPal is also there. I will work on getting my website back up, but I've been so busy lately. Again, it's not the top priority here because collecting email addresses where people who are not going to pay is not my main priority. I'm focused on the free content is the YouTube channel. So I do make a little bit of money from Google AdWords revenues, not enough to pay my bills, but my Patreon is where my bills get paid. So as long as I am able to balance that out and make a living, there will still be free content. But collecting emails and giving people more and more free stuff through emails is not really something I want to do. Now, eventually I will upgrade my website and maybe I will move more content there behind a paywall, but not right now. Maybe in 6 months or 12 months or something. We'll see. We'll see how things go.